From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 24th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. All right, the first three trades that you see going on the bottom of the chart have been held over from last week. So these are not new trades, just held over from last week. I just want to make sure you understand that they are not new trades. Let's go ahead and turn the trade window off. And now looking at the USD CHF, the dollar franc, we're looking way back in time, actually, all the way back into 2015. I want to look back here where this little black circle is on the left-hand side of the chart. Between the purple shaded area, which is 94.60, 94.80, and the orange shaded area, which is 93.75, 9400. That's going to be important as we look into our current time frame. So I just want you to see that the market found resistance and support for quite a number of days. Back here where the black circle is between the purple and orange zone. Now we bring it to our current time. And here is that purple shaded area. Again, let me squeeze the chart down a little bit. Now you see 94.60, 80, the purple shaded area, and the market making the attempt to break underneath that purple zone. Let's zoom in on that a little bit. And so now we can see the market making the attempt to break under the purple zone. So we know the last time the market was in this general area, 2015, we see the market pressuring underneath. And if it breaks the purple shaded area, 94.60 at the bottom, we have a good chance of it taking a turn back down to the next support, which is the orange zone. Now that doesn't have to happen. If by the end of day today, the market goes strongly bullish for the US dollar and back above 94.80, we could be seeing it back towards the green shaded area as our next resistance. So this purple zone is going to be highly influential for the dollar franc technically this week. If it stays underneath it, we head to the orange zone. If it breaks above it, we head to the green zone. Now it wouldn't be out of the question, and this has really been the pattern of the trend here for the dollar franc, is that it takes a little bit of a retracement before falling. It takes a little bit of a retracement here before falling back down again. So that's been the pattern. So it wouldn't be out of the question for it to take a little bit of a retracement back to the green or the pink zone before falling again in the direction of the trend. But we need to pay attention to that purple zone today for the dollar franc. Moving over to the euro dollar, we see a similar situation where the market's challenging resistance highs. Franc was challenging support lows, euro dollar challenging resistance highs. Right here where the little black circle top of the trend is, it broke the pink shaded area, made its way higher. That's, by the way, where one of our trades that's held over from last week got started, down here at the pink shaded area. So we took the buy there and it went up to the yellow zone, protecting profit as we go. Next thing we're looking for now is the break of the yellow zone. We need an open and close above the yellow zone, 1.1650, to give us confidence that it's going to go to the next resistance, which is actually into the mid to upper 1.1700s, all the way up here at the blue shaded area. So a break of the yellow zone, we look for it to go to the blue zone. If it gets back under the yellow zone by end of day today, we could be looking for it to pull back to the pink zone again. So let's go ahead and zoom it in on that, just get a better view of that. There it is right there. Breaking the yellow zone, we go to the blue zone. Under the yellow zone, back to the pink zone. Protect profit if you're in the trade from last week. If you're not, we're waiting for the breakout above the yellow shaded area. Take it down to the GBP USD. Now this currency pair also uptrend, but we're very close to the resistance high, so we need to watch for opportunities for breakout, but we also want to watch for opportunities for reversal. There's been a pattern within the trend, and let's just talk about the shorter trend, the midterm trend, if you will, the red trend line, top right hand corner of the chart. Let's zoom it in on that. There it is, that red trend line coming from the bottom. Now of course, probably the most important thing to consider is it went down before it went up. Because why is that important? That's what it's done now. It went down before it went up. So our trade from last week was buying the green zone. We're into profit. Next thing we're looking for now is the break back above 1.3030. That's the purple shaded area. And again, you look back here to the left, you see some historical resistance. Top of the blue circle is resistance into that purple zone. So we need a breakout above that. It's clear that if it gets above the purple shaded area, the orange shaded area would be your next resistance. So we needed to really break that purple zone before we can look for it to go towards 3071.3100. Back under the purple zone, we could be seeing another challenge of the green zone, but at least at this point it looks pretty bullish, and I wouldn't expect it to go down. I'd be actually looking for the break above 3030 for the continuation of the upside for the pound dollar. Moving over here to the USD CAD, I've zoomed way out. We're on the weekly time frame. I want to show you some history. Really, the bottom of the black trend line. Take a look. Bottom of the black trend line. This is where it began a support and reversal to go back higher. That's right around the green zone, just above or just right around 1.2500. That's important because that's where our current market is. I put a horizontal red line at the bottom of the green zone. So bottom of the black trend line, green zone, red horizontal line. That's important to the right hand side. And also important is if it gets through there, we can look back here with this little red boxes and see that there's a significant continuation lower if it gets through that red line. Now let's take it down to the daily time frame. Now we see where that sits. The green shaded area, 1.2515, holding our current support. The last time we were here, the bottom of that black trend line, it bounced and went back up. I'm not saying that's what's going to happen, but we have a highly influential support here. If it bounces, we have an idea that we could see some pullback. If it breaks, that's a significant change in historical pattern, and we look for the continuation lower, possibly back down into the low 1.23s, which is the orange shaded area down here at the bottom of the chart, for the dollar CAD. Moving over to the USD JPY, we are at the bottom of a trend again. That's not too hard to see. We've seen all these pairs today either at the top or bottom of a trend. And this one no different. We're at the bottom of the blue trend line. It was a significant uptrend on the black trend line. Blue trend line, significant downtrend. That is one of our other trades that we took last week that were in the short. It's been working out quite nicely. But let's take a look at the pink zone, 110.65, 110.90, the pink shaded area in the middle of the chart. You follow it back in time, we're basically looking at the bottom of this black box and the bottom of the blue box. What happened when the market got through the bottom of the blue box and the bottom of the black box? It went to the yellow zone back here on the left or lower, went to the yellow zone or lower down to the purple shaded area down here, down into the 109. So we know that with some confidence, we can say that if it breaks the pink zone, let's try and pull that over a little bit more. If it breaks the pink zone with some historical fact, there's a good chance that it's going to go at least to the yellow zone down towards 110. Well, 110. Here's something else interesting. Taking Fibonacci low to high of the black trend line, 618, 110.97. Let's just call it 111. That's top of the pink zone. So as long as it's underneath there, another breakout under the fib level, 618 fib of the black trend, the pink shaded area, we have good confidence that it's going to go to the yellow zone. But that's a significant break. It's got to do that. If it doesn't, maybe even looking for a point of reversal from the pink shaded area. Let's zoom it in a little bit here on the daily. So there it is. There's your blue trend line. I don't think it'd be too difficult actually, and a repetition of the pattern of the trend that we've discussed last week in the trade room, to see a little bit of a pullback, maybe even towards the orange zone. Let's just kind of put this out here like this, back to the orange zone. That could be, if we're looking to go short in the direction of the trend, I think it's back here at the orange zone or under the pink zone for the dollar yen this week. Moving over to the AUD USD, consolidation, congestion, whatever you want to call it, it is bound inside the orange shaded area up at the top of the chart between 79.10 and 79.55. Look at this, 1, 2, 3, 4 days we're stuck inside this orange zone. As we discussed last week in the live trade room, it either needs to break to the top side for a continuation of the trend or break to the bottom side for reversal. Right now, it hasn't done either one of those things. I probably would lean to the upside a little bit, but at least right now, I think it needs to break out of this orange zone above 79.55 or below 79.10 for our next move here for the Australian dollar. I'm not going to trade inside this orange zone. It's a breakout is what I'm looking for here on the Australian dollar. Moving over to the NZD, it's a very similar situation. We're at the top of the trend. It's often difficult to buy at the top of the trend. Remember, buy low, sell high. If you're at the top, if you're at the highest peak high, maybe not your best time to buy it. So maybe a little bit of a pullback gives us a better opportunity to buy it, or again, the breakout, 74.30, 74.45 is the green zone. It's had a difficult time staying above that. Zooming in on that a little bit. Take a look. That's right here. So if we can break this green zone, that might give us some more upside expectation. Now, if it breaks to the bottom side, that could give us that pullback that we need to get a better buy scenario, either here at the blue zone or even all the way back down at the pink zone, closer to where the blue trend line lives, down here into the low to mid 7300s. But at least right now, we just need to get out of this green shaded area. 4-hour time frame really won't change it. It really gives us a better look at that, doesn't it? It needs to break outside, either above or below, open and close above or below that green zone, to give us our next move for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.